Hello and welcome to CATEX-TV. I'm Tom Bailey in London. It's 4:30 PM in London, 11:30 Eastern Time and 12:30 in Bermuda. Today in history, today on the 11th of November 1918, the armistice came into force, which officially ended the First World War, certainly the First World War on the Western Front. The armistice came into force on the 11th hour, the 11th day of the 11th month, so that's 11 AM on today, the 11th of November. It's in commemoration of this day that we Brits wear these red poppies, and it's a big charity day for charities that look after veterans of all wars. Armistice Day is also known as Remembrance Day, though the 11th of November heralded the official end of the First World War on the Western Front. It did continue on the Eastern Front, as it were, across the former Russian Empire and parts of the old Ottoman Empire. The day has been declared a national holiday in many Allied nations to commemorate those members of the armed forces who were killed during the war. An exception is Italy, where the end of the war is commemorated on November the 4th, the day of the armistice of Villa Giusti, after the Second World War. And after the Second World War, the name of the holiday was changed to Veterans Day in the United States and to Remembrance Day in countries of the British Commonwealth. Armistice Day remains an official holiday in France. It's also an official holiday in Belgium, and is also known as Day of Peace in the Flanders Fields. And now to the news. The London Joint Cargo Committee, the JCC, has once again amended its watch list to reflect the growing threat posed by Somali pirates. Following recommendations from Exclusive Analysis, which provides the committee with statistics to help mould the organisation's cargo watch list, the JCC has changed its notation to warn underwriters of the severe threat posed in the waters surrounding Somalia. The JCC cargo watch list now warns underwriters of threat found in the Gulf of Aden up to 70 degrees east of Somalia coast, equal to 1,500 nautical miles of its greatest stretch. The previous boundaries of latitude 20 north in the north and 12 south in the south have in the main stayed true. The JCC has also warned there is no practical absolute limit of the range of Somali pirates. Some attacks have occurred in excess of 1,100 nautical miles off the Somali coast. Changes to the JCC cargo watch list come after a weekend in which Somali pirates made off with the highest ransom ever for the release of a vessel. It was reported in Insurance Day yesterday that pirates reportedly received $9.5 million, thought to be a record, for the release of the 319,000-ton crude oil tanker Samo Dream. The problems associated with the Somali pirates have all been recently exacerbated by the decision by the Kenyan authorities to release some captured Somali pirates without charge. Florida has agreed to cut the reinsurance collateral that is required by another two Bermudan risk carriers. Last week it was reported that the Florida Office of Insurance Regulation had slashed the level required by Hiscox Insurance Company, that's the Bermuda-based operation of Hiscox, to 20% from the previous 100%. It had already agreed similar terms with Hanover Re, Hanover Insurance Bermuda, and Excel Re. Now a further two Bermudans, Ace Tempest Re and Partner Re, have been added to the list. According to Florida's Insurance Commissioner Kevin McCarty, he said these collateral agreements are intended to encourage additional investment in Florida's property insurance marketplace. He added Florida has played a key role in modernizing the U.S. reinsurance market. Lawmakers in Florida agreed in 2007 to allow alien reinsurers with strong financial strength and credit ratings to post collateral less than 100% of their gross liabilities. To qualify, reinsurers must have surplus exceeding $100 million. Now, the new entity formed by the tie-up between Cooper Gay and Sweat and Crawford, known as CGSC, says that it was ruling out a foray into the retail broking sector. In their first joint interview since the transaction was completed, Cooper Gay's Toby Esser and Sweat and Crawford's Neil Abernathy acknowledged the sector as a whole faces huge challenge to grow earnings both predicted further consolidation. For Cooper, Gay, Sweat and Crawford, however, the focus will be on wholesale and reinsurance business rather than in expansion into retail insurance. Abernathy, the chief executive of Sweat and Crawford, said, "Our clients are the insurance companies and the retail brokers, and I can't envisage us doing something in the retail space." He went further, insisting, "We will not go into the retail space. There is no way we can be doing what we're doing then and say to our clients, oh, by the way, we're not going to be competing with you." Indeed, according to Abernathy, it is retail insurance broking that adds myriad of levels of management involvement to a firm, slowing its response time. He said, "We will never become a business with 15 layers of management to make decisions as long as Essa and I are here," he insisted, adding, "I think you can grow and become a larger firm without losing that entrepreneurial spirit and without creating multiple levels of management." The biggest insurance brokers' third quarter earnings underscore the difficulty of achieving growth in the distribution channel against a backdrop of softening insurance market rates. Brokers present themselves as their clients' advocates, but of course those still working largely on a commission basis find their revenues hurt as rates tumble. Coupled with that, less demand for many lines of insurance and lower valued insured, both prompted by wider economic environment, and the brokers' difficulties are compounded. Against that background, there is now a prediction that we will see considerable consolidation within the broker market over the next 6 months. We'll keep you posted on any developments we see across that. Obviously, there are rumours circulating about a possible suitor for JLT. Marsh has, of course, been mentioned, as it often is in these situations. And going on to Marsh and McClellan, the holding company MMC's Chief Executive Officer Brian Duperreault said he can see evidence of an economic rebound. Bermudian Mr. Duperreault said yesterday in a conference call, "We are seeing some signs of the effects of the Great Recession," as he called it, a weakening. Mr. Duperreault's comment came after MMC announced quarterly earnings slightly missed analysts' estimates. The company reported adjusted earnings of 27 cents a share in the third quarter. Analysts in a FactSet research survey expected a profit of 28 cents a share. Revenue at MMC's main risk and insurance services division climbed 2% in the period, excluding currency fluctuations, acquisitions and sales of business. The New York-based company's shares fell 3.2% to $25.15 in yesterday's trading. And finally, British non-life insurer Nove Group said investment return for the first 9 months of the fiscal year fell 7%, but it sees its international reinsurance business growing. The company expects investment returns from its core asset classes to remain low in 2011. London-based Nove said Chile, Haiti and New Zealand earthquakes have costed about $15 million net of reinsurance, and that it does not expect a material financial effect from a number of aviation losses. Nove, which had £1.09 billion of investment assets at the end of September, said investment return fell to £24.7 million from £26.5 million a year ago. Chief Executive Matthew Fosh said in a statement, Nove has reduced its reinsurance spend as a proportion of gross income and has improved the efficiency of the business. Gross written premium was up 54% at £743 million in the January to September period, and the company's international reinsurance business, Nove Re, and European property and personal accident unit accounted for £117 million of that. Shares in the company, which have risen 21% in value year to date, were flat at 360 pence as the stock exchange opened yesterday. Well, that's all from us today. We'll be back with you at the same time again tomorrow. Until then, thank you very much.